Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel, and let's talk a little bit about market timing today, because I often get asked, is this a good time to invest? Is it a good time to pull back? What do you feel about the market? Lots of different variations of really the same question on whether or not it's a good time. Before we get into all that, I'd like to make a request that if you are listening to us via podcast, please follow us, give us a rating. I haven't asked for that in quite a while, so it really helps us and also our listeners and really spread these messages so that way people can get more education around their retirement planning. So if you're listening to this podcast, please give us a rating. If you're watching it on YouTube, subscribe. Anything would be helpful. Again, just to spread the word and get this out to more people to help as many people as we can. So market timing, this is always a fun one because it's really important that we also answer that question in light of what is the time frame in which you need that money. If you need the money in the short term, don't worry about investing it in the stock market. So if this is money that you're going to need back in a year or two or 5, it does not belong sitting in the stock market hoping that everything's going to work out in the short term and everything's going to go higher. Yes, there is some stuff you can do that's a little fancier. You can use options, and we're not going to dive into all that sort of stuff. But in general, if you really need the cash, don't put it in the market for the short term. That is the basic answer. If you remember nothing else from today, don't invest short term in the stock market with money that you cannot afford to lose. That's not meant to scare you. That's not meant to say that the stock market is crazy or rigged or all the other nonsense you hear about, but it's just not an appropriate place to put cash that you're going to need in the short term. Long term, however, it is a phenomenal place to invest. And that's what we're going to talk a little bit more about today to show you some history on timings of the market and why there's a difference between a good time to invest and an optimal time to invest. So let's back up a little bit. Where are we at now? So as of recording this, the S&P 500 index, which is a very common barometer for how the stock market's doing, that is sitting at about 5,800. It's going to go up or down by the time this goes out to the world. But as of recording, it's about 5,800. Again, we're getting lots of questions. Hey, is this a good time? Not a good time? And we go back to time frame. If you need this money in the next 5 years, it doesn't belong in the stock market. If you need it for the next 5+ years, absolutely it's a good time to invest. I can't guarantee that it's the optimal time to invest, but it's going to be a good time to invest. I suppose I can't guarantee that either, but history has shown that if this is money that you're going to need 5+ years from now is absolutely a good time to invest. So let's look back historically and explain why that is. It's 5,800 right now as of recording this. Let's go back to COVID times. So right before COVID hit, the S&P 500 was actually at about $3,400. Now already you're thinking, wow, that's quite a jump, because here we are at the end of 2024 and the pre-COVID level was 3,400 and we're currently at 5,800. That's a great move. So what happened during COVID? It dropped from about 3,400 to 2,140. Pretty big drop. Yep, if my math is correct on the fly here, it's about 1,260 point drop off of 3,400. Yeah, that's a big drop. And it was very sudden too. It was quick. It was about a month. Now, you can say that, was it a good time to invest before COVID hit? Yes, most definitely, because you would have gone from 3,400 to 5,800. Was it the optimal time? Well, no. The optimal time would have been after COVID hit and the stock market dropped. Sure, it would have been a lot better to buy around 2,200, of course, but nobody can guess that. Nobody can foreshadow COVID appearing and the market dropping like that. And all of a sudden, you have this magic opportunity. And the problem with trying to foreshadow that is it may not actually happen. And we see this over and over. And I went off on this on a recent episode a couple weeks back that people have been screaming recession for the past 15 years hasn't really happened. And the challenge is if you're constantly waiting and waiting and waiting for the next big drop, you might actually be losing because you're missing out on some huge gains in the meantime. So COVID, it would have been optimal to buy after it hit and the market had dropped something closer to, you know, $2,200 or something like that at the lows. That would have been phenomenal. But we can go back to before COVID when it was 3,400 and say, yes, absolutely, it was a great time to be invested because you would have gone from 3,400 then to 5,800 now. That's a big jump in just under 4 years. Great, great deal. And heck, that was only 4 years. We're not even talking about long term. So let's go back and talk even longer term. Let's go back to the fall of 2018. Now, what cracks me up about this is that the fall of 2018, I shouldn't say fall, it was really kind of end of fall, early winter. The end of 2018 was pretty nasty. October, November, December. If you go back and look at the stock market at that point in time, what had happened is the Federal Reserve, one of the things, but the big thing was that the Federal Reserve announced that it was going to start aggressively raising rates. Well, market didn't like that at all. And the Federal Reserve actually backtracked a little bit on that. If memory serves me, I believe it was actually on Christmas Eve or somewhere in that area. They actually said, okay, nope, we're gonna pause that for a second. And so they did not turn out to be as aggressive as they had announced, and the market actually bounced back quite nicely. But let's turn that, that was kind of a side note, but it was a really nasty time, and yet nobody remembers it because really, if we look at things long term, it was a tiny blip over a couple of months, but that blip was a decent sized drop. We started at about 2,900. So we started at 2,900 at the top in fall of 2018, and we dropped all the way to 2,400. That's not as big as the COVID drop, but that's still a big drop in just a couple of months to shave off 500 points just like that. But again, we go back and say, okay, well, was the top the optimal time? Maybe not. But still, you're talking about going from $2,900 in the fall of 2018 to $5,800 in the fall of 2024. That would be nice to have. But if we're sitting on the sidelines worried about what might happen and what if this, what if that, we're not going to capture it. So instead of trying to wait for the optimal time, we can look and say, if this is long-term money, let's put it to work. Let's let the stock market do its job and let it grow over the long term. All right, one more. Let's dial back all the way to the 2008-2009 disaster, where the stock market dropped from a high at that time of about 1,600. And by the way, the high was actually in 2007. That's when it really started hitting the high and rolling downward. So let's go back to that 2007 high of about $1,600. And by the time it was done dropping, it had hit the dreaded $666. So well over half is what it was cut into. Went from 1,600 down to 666. So again, we can look at this and say, wow, the optimal time would have been the bottom when it was under $700. That would have been great to get in, of course. But let's go back to 2007. The market's sitting at $1,600. The Great Recession hasn't hit yet, but things are starting to wobble a little bit maybe. And it's sitting at $1,600. Was that a good time to get in? And most of the time people would say, well, absolutely not. You had this huge crash in the Great Recession. It took so long for it to bounce back. And all of that is correct. And that though, is the reason why we do not invest short-term money that we need in the stock market. That would be a bad idea. And that would have gotten all messed up in the Great Recession and this big crash. So that's a no-no. No investing short-term money that you need in the stock market. But let's go back to the long term because we love investing in the stock market for the long term. So let's keep these levels in mind. Right before things start rolling over, in 2007, it's at $1,600. If all you had done is left it alone, and you're sitting here now today, and your investment is at $5,800, that's a glorious jump. That's incredible. That is that's more than tripling. That's about 3.5 times your investment just by letting the money sit there. So was it the optimal time to be investing right before the Great Recession? No, it would have been great to let it come down and then invest even cheaper. Was it a good time to be in the market? Absolutely, if you are investing for the long term. You would have gone from 1,600 back then to 5,800 now, and that is a phenomenal ride higher. So don't miss out on the long-term moves because you're waiting for the optimal time. If you're focused on the long term, now is a good time to get into the market. Pretty much any time is a good time to get into the market. Might not be the optimal time, but if you're investing long term, it's always a good time. Thanks so much for tuning into this episode. I really appreciate your support and hope you found value in the conversation. If you enjoyed it, be sure to subscribe, leave a review, and share it with someone who might benefit from it. Your feedback helps keep the show growing. Until next time, take care and stay strong as we learn